Okay. Aloha, ladies and gentlemen. Greetings again, dear traders. It's a beautiful trading Friday. Once again, good to have you here. It's been a great week full of many opportunities. I cannot describe it more than that. We've had good Bitcoin moves. We've had lots of take profits from oil, from crypto, from Forex, and so on and so forth. As always, I'm Atomashi Dania, Vestrado's global market analyst. It's great to have you here again. Today, Friday, the 16th of May, 2025. It's another beautiful weekend. Time to cash out, time to check our statement, see what we can do better, see what we could have done better for better profits. Time to look at our results, assess ourselves for the week. How did we perform? So, of course, we have Vestrado. We are domiciled with offices and representations all over the world: Malaysia, Dubai, China, Indonesia, Singapore, Kenya, South Africa, Nigeria, and so on and so forth. Whichever part of the world you're joining us from, welcome. We've got financial asset classes ranging from crypto to stocks to indices to Forex, okay, and so on and so forth. We have it all. And our spread on Forex is quite tight from zero point 0.4 to 0.6 or 0.8, depending on which account you are trading. All right, that's about that. Now, we are going to continue our training from last week. Okay. Today's topic: the ways of assessing support and resistance, part two. Part two. Ladies and gentlemen. So, we're going to be doing the same thing. First, we're going to look at what we gave on Telegram today, how that fared in the markets. We're going to look at support and resistance again and the ways of the assessment. We gave 5 ways or 4 ways last time. This time around, we're going to be looking at the remainder to try to complete that. And perhaps in the next lecture, or maybe 3 lectures from now, we're going to be talking about how to use the support and resistance to possibly plot take profit levels. Okay. And then finally, today we're going to be looking at some tradable opportunities. What to trade going into the weekend, perhaps for crypto, and perhaps from the start of next week. Okay, without much ado, let's get into the action. Now, first, we want to look at Telegram. What did we have on Telegram today? For today, we had some nice outlooks given. We had a brief outlook on GBP USD. Okay. But before Friday today, let's look at what happened on Thursday. We had 4 take profits from outlooks given from XRP USD Ripple. We advised a sell. Price went and captured 4 take profits. Same. We gave a brief outlook on Bitcoin. And then from outlooks given on Wednesday and Tuesday, we had some take profit levels from the AUD USD. You can see that right there. Yeah, sorry, there was a glitch in the technical issue there. So you can see that right there. AUD USD quintuple take profits, 5 take profit alerts. All right. We had from gold 4 take profits, about 2,000, over 2,000 pips. Next, we had from GBP USD 8 take profits. Okay, 8. Beautiful day, beautiful week, really. Okay. On the 14th of May, we gave brief outlook on the AUD USD. We already talked about that. And gold and pound. The pound USD, we had double take profits from the NZD USD. So you want to join this Telegram channel, it's very easy. Okay. We also had double take profits on GBP USD on the 13th of May. So we had good take profits this week, good profits, okay, good performance. Now, if you want to join us, it's very easy, okay. As our media handle on Telegram is at Vestrado Global. You can always search for us right there in the search box for Telegram, okay, at Vestrado Global. The YouTube handle, of course, you know, is vestrado.com, and that's about that. That's that for Telegram. Now, so let's move on to the next and begin our classes, our training proper, okay, in looking at what support and resistance is. Okay, we're going to be looking at what support and resistance is, and then Of course, as always, complete the different parts. Before then, let's take a break, take a pause. If you're joining us, you can leave your questions in the chat section. You can use this opportunity to actually try to um, get yourselves acquainted with any problem you're having in the market. If support and resistance has been an issue for you, you can drop your question here anytime. Um, I'll be here for you. I'll try to answer you as much as possible. If perhaps maybe it's another thing, maybe another topic, something else that plagues you in the market, drop your question, no problem. I'm also going to try to respond to you. So today's topic is not going to be too long. We're going to try to round up as much as possible, as quickly as possible. So let's go into our pin board. Let's go into our pin board and have the action begin. There you go. So from last week, we said we gave 4 ways of assessing support and resistance. Uh, so let's try to put that right there. Apologies about the frogs and toads. I have a small garden beside my house here, so okay. So the major ways we said let's establish that from last week. Number one, via complex reversal patterns. Complex reversal patterns, and two, we said via previous, rather via historical data, and this can be subdivided into previous, okay, significant swing high or swing low in recent past, and then significant swing high or swing low in the past, okay, in the far past. Let's use that. Now, next on the list is VAR indicators and objects. And we said indicators and objects such as Fibonacci, pivot points, and moving averages. And finally, we said VAR psychological levels. So this is it. Now we said when it comes to reactions in price, okay, you're more or less like saying that this gives us, there must be at least 2 to 3 previous reactions from price, previous price reactions to this level. Okay. And here we said via historical data, historical data could be one time, 1 to 2 times, one to two previous price reactions. So let's, and this guy, we said no reaction in the past. Doesn't have to be. No previous price reaction. Same with the psychological level. The fact that they're there, they exist, okay, um, is already a cause to consider them as support or resistance levels because they're usually mapped out for you. Now, we have a lecture titled, today we're going to be looking at using indicators and objects to tag or get support and resistance levels. We cannot do that um, extensively enough, okay? But let's see how we can do that using maybe the pivot points or the Fibonacci. So we're going to try to use the Fibonacci to do that. Pivot points, we're not going to focus on today so much today. For Fibonacci, if you want an extensive knowledge on how to use Fibonacci, you can wait for our next classes coming up. Okay, we're going to touch upon each one carefully. Pivot points, Fibonacci, moving averages, and so on and so forth. Today is just a general class. All right. So this is where we are. And next we are going to assessing support and resistance via indicators and objects. And we're going to try to do that using Fibonacci and maybe one of the moving averages. Okay? So stick with us. Don't go nowhere. The class is short today. It's brief. You can come and watch anytime. This is a live recording. So let's go into the charts without much ado. There you go. So with complex reversal patterns, let's do a recap. And let's try to use what we gave on Telegram today as an example. Now, we said price had already touched resistance on or formed resistance on the Euro USD. How did he do it? You can see that, look, we have two key components here. I'm going to show that to you in a bit. So after hitting the 1.1571 price level, after hitting the 1.71 price level, it formed on the 4-hour chart the heads and shoulders pattern. Head, left shoulder, right shoulder, using complex reversal patterns. This is just a recap. Okay. By the existence of the head and shoulders pattern, this already indicates that price has formed some sort of resistance or is experiencing resistance in that price region. If you want to know more about complex reversal patterns, there's another video on the live section of this page. Okay, be sure to go there and watch. You can see the heads and shoulders pattern on Euro USD there, indicating that there's resistance. Now, in looking at historical data from the past, from the far past, if you look at the daily chart, I'm trying to see what price is reacting to. Okay, and mind you, we said for complex reversal patterns, there needs to be at least 2 to 3 reactions to of price to a certain region, a certain price level or region. Now, if we look and map out the region here between the shoulder and the head, we see that there are 3 reactions to price. 1, 2, 3. 3 previous reactions. Now let's go to the weekly chart. Look at price. Price seems to be reacting. Follow the mouse cursor, 1.1571, all the way. Seems to be reacting to this significant swing high here. So let's mark those levels that coincide with price level at the moment. This is a previous significant swing high right here. What are swing highs and swing lows? Sign up, come for our beginner training, and our account managers will fix you up with basic knowledge like that, swing highs and swing lows. But I'm going to eventually talk about that in future trainings. Next, we see another reaction to the same price level right around here. So this is a recap. You can see complex reversal patterns at play. And now, historical data using significant swing highs and swing lows in the far past. Also around here. Now, what are these dates? Let's try to map out these dates using vertical lines. It's a significant swing high off. If you follow the vertical line down, let's give the vertical line the red line. June 6th of January 2019. This guy, November 2017. Also, April 2016. In fact, we also have this guy right here. You could say that. Even though it's not exact, it's still very close. So I'm going to use that. And if you follow the mouse cursor, August 2015. So it's clear that, in fact, we seem to even have something close to it around March, September 2005. So we can see already from these that um, where price is currently reacting to seems to be a significant swing high, okay, of the far past. Look, seems to be a significant price level of the far past. Hence, it has met our criteria for one or two reactions in the past for significant swing highs or swing lows. Now, if you look at perhaps something more recent, okay, this is Euro USD. Look at where we set our take profit levels. I want to use this take profit level as an example. This one right here, 1.1129. What did I use? What was the reference? I used this significant swing high right here in recent past because this is happening right now in price. Okay. If we go back in recent past, this is around April 2005. April to 2025. You see that? Recent past. I already call this a possible reaction point, a possible take profit level by drawing my pink vertical horizontal line right there, as you can see, in correspondence with this significant swing high of recent past of 3rd April 2025. So that's how it is. In this case, there was one significant reaction of price in the past to this level. Hence, it automatically becomes, in a downtrend, a support level because if price heads to that level going down, it becomes support. So you see a swing high, perhaps resistance, becoming support. That's that. Now going on to today's class. Going on to today's class. The example of using the Fibonacci, perhaps even the moving averages and psychological levels. All right, look. We're still going to go to the Euro USD. Now, assume that we said already that price has formed the heads and shoulders, right? And we know that this will possibly be the neck level of the heads and shoulders pattern. For those of you who are familiar with heads and shoulders, if you don't know about heads and shoulders, we have a lecture on the same live YouTube page. You can read about it. You can watch it rather. Heads and shoulders patterns from complex reversal patterns. The lecture is titled Complex Reversal Patterns. Making consistent income from complex reversal patterns. So if we call this the neck level, okay, and say price breaks past it, which will be a signal to sell, this is what the Fibonacci will do. Say I start drawing my Fibonacci from here, the beginning of the trend up until the end of the trend. Fibonacci has got, let's try to make the lines thick enough so that you can see it, and perhaps give it the red color. Stick in that and give that the red color. You see that? So Fibonacci has got, let's try to unextend here. All right. So if you train your eyes well, you can see that there are some certain levels. The first red line you see here is the 0.0 level. The second horizontal red line you see is the 23.6 level. Okay. If we mark that, let's mark that here. Today is not we're not talking about Fibonacci today. Today is about support and resistance in general. And the next horizontal line, the red one, is the 38.2 level. And the one below that is the 50.0, as you can see right here. In case it's not visible, then this guy is the 61.8 price level. Next red horizontal line, 61.8%. These are feeble levels that tend to elicit a reaction in the market. And the final starting line here is the 100% level. If price heads back to the starting line, it means there was a complete or total reversal of price. So that's feeble. Now, what does this mean? Compared to the complex reversal patterns that had three reactions of price to a certain level or range, if you mark the feeble levels as possible, this is Fibonacci retracement, by the way, Fibonacci retracement. Fibonacci retracement. And the way to add that on your chart is you can see it right here on the MetaTrader 4 Vestrado's platform. The horizontal lines with an F at the bottom, or you go to Insert, Fibonacci, and then Retracement. So the way it works is this. Price being here right now is below the 23.6 horizontal mark or 23.6 level of Fibonacci, below this level. Okay. But when it touched the 38.2, we could see that there was an immediate reversal of price. Price started to reverse after touching the 38.2 mark as though it was a taboo. Okay. So the Fibo works like this. It means if price once again breaks past 38.2 and touches 50.0, 50.0 is a possible reaction point. Okay. 50.0 is a possible reaction point that could elicit a reversal of price action. So you have to be careful. Hence, either of two things could happen on 50.0 mark. Price could touch it and reverse, or break past it and continue. Break past it and continue. So if price touches it, it could reverse, or it could do what? It could break past it and head towards 61.8. If it touches 61.8, you see the marking right there. It could touch it and reverse, or break past it clearly and then continue towards the 100% mark right here. And if it does, it means that there would have been a total reversal of price. So what does this mean? It means all the feeble levels are support and resistance points that could elicit a reaction of price at any moment in time. Therefore, as a trader, you want to be very careful. You really want to be very careful because um, even though price may not have touched it in the past, it's in your best interest to actually consider the Fibonacci levels as possible support or resistance levels, possible reaction points where price could break past it or touch it and reverse. So this is how an indicator can act as um, support and resistance levels, can form or create support and resistance levels for you. There doesn't have to be a reaction in the past. The fact that the lines are there the presence of those lines, the presence of those price levels tend to already show us that those are possible support or resistance levels. And you might want to ask, what is the concept of the Fibonacci? How does it work? Why should we expect price to react to those levels? Is it magic? Uh, um, what's happening in the markets? Stay tuned to this channel. We're going to talk about the Fibonacci very soon, perhaps in coming lectures. Okay, so you can also check. There's a lecture on Fibonacci from our last class. You can go back and check on that. The live section, Fibonacci retracement. Okay, Fibonacci, application of Fibonacci in price action, fixed and dynamic use of Fibonacci in price action is quite detailed in the live section. Go there and watch. You can find it there on our page on YouTube. All right, so this is for Fibo. Now let's look at moving averages and then we're going to call it a day. For moving averages, we're going to use the GBP USD. Because we already gave outlooks on this guy. Yeah, we already captured all our take profits on this guy, all take profits given. Now let's try to plot all our moving averages. Okay, let's take out the unnecessary ones and leave two major moving averages, the 50-day moving average and perhaps the 100-day moving average, the 200-day moving average rather. The 50-day being the green line and the 200-day moving average being the red line. Okay. Now look, let's look at the 4-hour chart, for example. What happened when price touched upon this moving average? Now, if you follow this trend by the vertical line, between the vertical lines I'm going to draw, between here and here, you notice that price was going in an uptrend. And when it touched upon the red line, that's the 200-day moving average, what happened? It just struggled to break past it. It struggled to break past it. The 200-day moving average was already acting as resistance point. So assume we're here in price. If we were here in price, say we were here, and we already see the 200-day moving average high up there, it's in your best interest to already consider it as a possible reaction point. In this case, in an uptrend, consider it as a possible resistance point. And that's exactly what happened here, because price, when it touched upon it, reacted strongly with a massive bearish candle drop right there, and then kept touching and touching and touching. Eventually, it just couldn't break past it and kept going down. The 200-day moving average held as a strong resistance point. You can see how massively it kept going down. This is the 4-hour chart. It's applicable on the 5 minutes, the 15 minutes, the 30 minutes, the 1 hour, 4 hour, whichever time frame you're willing to use. Here, if you consider this trend, this is recent. So look, you consider the trend from here to here. Price, let's highlight where there was a reaction. Price in coming down touched the 50-day moving average. Okay. And when it did, it reacted around it. It refused to break past it clearly. Okay. But the moment it broke confidently and conveniently below it, look, it broke past it, formed a rectangle. This is a rectangle. Okay. For those of you who don't know what a rectangle is, come to our Telegram channel, you find out. And then when it broke past the range of the rectangle, being this guy right here, 1 and 2, convincingly here, there was a continuation to the downside, complete reversal. So the 50 MA was sort of acting as, if you look at it in a downtrend, support. I hope that is clear. Now, let's keep going. Look, if you consider this trend from here to here, you see that maybe not so exact, but price was reacting close to the MA, 50 MA right there. As soon as it came very close to it, reversal. When eventually broke past it convincingly, then it continued going down, treating it as a typical support and resistance. Here, support level. Now, look again. When it broke past it again at this point, when it now touched the 200-day moving average, here in this case, the 200 MA acting as support. It's acting as support here. So this is support. And this is also support. And what did he do? As soon as it touched it, massive reversal. Here, the 50 MA was acting as what? Resistance. I hope you see how beautiful the MA is. You can see how indicators are working like magic. Now, let's say we were here in price and we're close to the 50 MA. If you're a wise trader, you will know that you have to close your trade before it touches the 50 MA line. Close your trade. And then if you did that, you would have been right because price reacted to it by this nice movement right here. When it broke past it, it kept going down. And then if you were here in price and you saw that it was approaching the 200 MA, you would have closed your trade a few pips before it because you would have considered the 200 MA right here, the red line, as a possible support point. And if you did that, look at that. You would have been right and safe because there was a massive reversal afterwards. And then here, if you considered here as resistance, you would have been right because look, it went back down again. 50 MA acting as resistance, 200 acting as support here. Here, the same 50 MA acting as support. That's that. Ladies and gentlemen, it's that easy. It's that simple. Now, that's that for um, support and resistance using indicators. Let's round up today's training talking about psychological levels. What are psychological levels? What are psychological levels? So we talked about this topic before on YouTube. Okay. Psychological levels are rounded numbers known to easily influence a trader or a level a trader is more likely to set as a target. For example, between 1.1223 and 1.1220, this is psychological level. Now, between 1.1223 or 26 and 1.1200. This is a psychological level. Rounded numbers. Okay. So between say Bitcoin, for example, if Bitcoin is 95,674 and 95,700, this guy is a psychological level. And then between 94, 99, 600 and 100K, this guy is a psychological level. This is also a psychological level, but when you compare it to 100K mark, the mind is more likely to set a target at 100K mark than setting it at 99,600. I want you to understand this about the market. So that's what psychological levels are. And then in translating that to the market, what does this mean? Let's show you an example of where psychological levels came to play. The same GBP USD. Oh, there's a perfect example right here. Let me show you that. I remember now. The almighty gold. Look at what it did. We saw price go up very nicely. Kept going up and up and up and up. What did it do? It kept going up and up and up and up until it got to this level. If you look at this trend, what's happening right here? Look, as soon as price touched the $3,500 psychological level, there was a massive reaction. Most traders closed their buy positions and switched to sell or closed it, and there were more sellers in the market. But at that point, there was a strong reaction. If you look at the reversal candle there alone, you could tell that even this is a railway track. And what is the railway track? The railway track is characterized by an abrupt change in the direction of price. Railway track, for those who don't know what it means, it's a pattern that forms that looks like the proper railway track or railway line that you used to. If you switch to bar chart, it's better appreciated. You can see that right there. Beautiful railway track. Instant exit from the market. $3,500 mark. So you can see it. Okay. $3,500 mark here. You can see how price reacted to it. So that's an example of the psychological level. All right. So this is the end of today's um, training. We still have a bit of time on our hands. So let's see how we can talk about perhaps a few pairs, what to trade, how to enter. Now, I'm going to look at my guy GBP USD here. Of course, 4-hour chart, heads and shoulders, indicating that there could be a possible drop in price. Okay, but if you look at look at price right now, it's not so determined or decisive as to whether it wants to drop. At this point, it's reacting to the first key support level of 1.3261. Okay, not convinced about the break going down. So what will I want to see? But on lower time frames, however, it has formed the 1, 2, 3 reversal pattern. It has broken past it. It broke past it, and we set our key support level at 1.3278. If price breaks that going down, okay, continuously and breaks past 1.3261 and perhaps this significant swing low right here, I want to sell. I'll consider selling to 1.3239. If it goes below that, perhaps 1.3219. If it goes below that, 1.3200 psychological level. Below that, 3174. Below that, 3139. And below that, 3094. I'm strongly bearish on GBP USD. For Euro USD, the same heads and shoulders pattern by the solid yellow circles you can see right there. Okay, also formed some sort of trend line, broke past it, captured 3 take profit levels already. It's very visible on Telegram. So if it resumes below this level on Monday, I want to sell up until the 38.2 Fibonacci mark I just drew, or perhaps maybe 1.1100. And if I want to be conservative, I first attack 1.1123 level right there. Okay. And if price goes below 1.1100, psychological level, I'll be looking at 1.1065 and below that 1.100. That's for Euro USD. And now Bitcoin going into the weekend. For those of us who want to trade Bitcoin, what do I see? Well, I see this guy from patterns as though it wants to reverse. Okay. So for me, my key support area is yes, 1.103105 key support area. If price goes below that, our target 102757 right here. If it goes below that, 102517. But on lower time frames, we see that it seems to be moving nicely along a trend line. So if price breaks the trend line significantly, I'll target 103105 on a sell. If it goes down 102757 below that, 102516 and below that 102264. Ladies and gentlemen, if it goes below that, I'm going to be looking at possibly 101622. This is Bitcoin. It's looking strongly bearish, but do not rule out the possibility of a bullish run. I'll consider major bullish positions if I see a break above this guy right here. If it goes strongly above that, let's give that a thick blue line. Then I'm going to consider buying. So perhaps this guy, 104, maybe 105,000. And if it goes above that, I consider buying too, 105,742 or 106,000. That's Bitcoin, ladies and gentlemen. And that's that for our training for today. It's been great to have you. Thanks for joining us. Do not forget, we are here. We'll always be here. Okay, you can always join us for trainings. Ask your questions pertaining to anything at all pertaining about the market or about the topic we're talking about. It was great to have you. As always, I'm Atomashi, Dania, Vestrado's global market analyst. Okay, we have Vestrado, and as we leave tonight, I leave you with these beautiful words. There are millions of traders in the world as there are thousands of strategies. Whatever you do, don't be overconfident. Don't be greedy. Learn to wait. Waiting is trading. Waiting is trading. Ladies and gentlemen, the trend is your friend and trade.